Welcome to the Rewarded Consumer Podcast. My name is Michael, and I have a general passion to get more rewards out of my everyday financial activities. I wanted to share this passion with you to help give information on tools that can help get more out of these mundane everyday activities. I am joined today by a group of my friends who also have a similar interest.
Hey, I'm Pete. I'm here to learn and possibly even share useful experiences from my financial decisions as well.
Hi, I'm Stas. I have an interest in technology and finance, so let's explore this world together.
Hi, my name is Jan. I have a technical background, but would like to explore the thoughts that my friends have around financial aspects such as credit cards and other reward programs.
Welcome to the Rewarded Consumer Podcast. Today we're going to be talking about credit scores and how to understand them a little bit. I don't have very much background in this, so I'm going to lead Stas in this conversation with us. And we're going to talk a little bit more about credit scores, and he has a little bit more knowledge than I do. So I'm going to pass it on to Stas. Stas, lead it off.
Thanks, Mike. Before we get too far into this, let me just start off by saying we are not tax attorneys or financial experts, so please don't go out, open a bunch of credit cards, max them out tomorrow because you think that's what we're telling you to do. We're not experts here. We're just telling you how we understand things. We're just talking about our own experiences. Yours may differ. And like I said, we're just presenting what we understand and how we understand credits to work. We could be wrong, especially different places, different laws. Your local laws might be different, so what we say might differ for you. However, if anything we say sparks an interest, please do some research. If you need to, go to your local financial institution, talk to an advisor there, and they can help you along with that as well. So today I wanted to talk about Credit Karma. That's an app that helps you keep track of your credit score. First of all, why do we care? Depending on your circumstances, maybe you don't. Credit scores help banks understand how well you manage your personal finances and how much risk they are taking if they give you a loan or a credit card. And remember, credit cards are a different type of loan. They're still a loan. If you're low risk, meaning you have a high credit score, they feel more comfortable with you. They give you a better interest rate. If you're a higher risk, meaning you have a lower credit score, they might want to offset that risk by charging you a higher interest rate. If you have a credit card and pay off your entire balance each month, the interest rate might not even matter to you. However, if you're buying a car or a house and you're getting a big loan, that could affect things a lot. Like a difference between a high and a low interest rate could literally mean tens of thousands of dollars in interest over the life of the loan. I don't know about everyone else, but I personally have better things to spend my money on over the next 10 years than to pay the bank an extra $100 or $200 or more just because my credit score is not that great. I'd rather keep it higher, keep my credit score higher, get a lower interest, and pay less for the bank and keep more of my money to myself. Also with Credit Karma, their scores are just estimates. They're not actually the real scores that the financial institutions will see when they look up your credit score to give you a loan. It's just best estimate of what Credit Karma thinks your credit score would be. So it's a good reference point, but it's not the exact number. Having said that, they do break it up into various categories. By that, I mean Credit Karma. Again, this is where banks might have other categories, but these are just good categories to go off of that are important, and the banks probably look at as well. They might have others, but these, again, are a good guideline. And Credit Karma, they rate these with high, medium, or low impact, depending on how they think this category will impact your overall score. So having said that, let's get into it. The first category they look at is payment history. Everyone knows you should always pay your bills on time, every month, just pay off the entire balance, and that's the best scenario. Even missing one or two bills could mean your payment history is no longer 100% perfect, and the lower you get under 100, the worse it is for your credit score. When they say it's high impact, they mean it. 98% payment history already puts you in the caution zone. In college, 98% is an A. That's a great score, but for them, 98% is already pushing it. So you really should be paying off your bills on time every month and keep that payment history 100%. So like I said, this is a high impact category, which makes sense because this is the whole point of a credit score, to show that you're able to pay your bills. If you can't pay your bills, of course, your credit score is going to go down. That, and of course, low credit score, that means other companies might not even want to give you a loan in the future. So important category. Do you guys have anything to add?
One thing I might add there, the credit card companies, that's actually going to hurt your credit score, but also they almost want you sometimes to not pay your credit bill, because what that means for them is that, you're not just hurting your credit score, when it comes to interest payments. It's also going to give them an extra money, because you're only paying maybe the minimum or not paying it at all, and that's going to show that you're still a liability. It's definitely a big factor. And as you're saying with like loans with housing, I know when we first were looking at a house, they had an issue with one of us not having 2 credit cards. That's pretty much what I have to add to that.
Right, and you have a good point that the banks, they want you to pay the interest. They want you to miss a payment. That way they can charge you more, have you pay more interest. But as consumers, we want to keep our money. We don't want to pay them that interest. We want to keep our money to ourselves and not just pay it out for nothing.
Let me ask you guys a quick question. Have any of you guys missed a payment before?
The only thing I can remember myself was, I think back when I was in college and moving between my parents' house and college, the switchover period, I might have missed it there. But most banks, I think, are forgiving, like as long as you don't push it. If you miss one payment with a good excuse and you don't wait until the end of the month, call them up real quick, tell them, hey, I'm sorry, I have a valid reason, obviously give them the reason, then they might forgive you once or twice, just don't push it.
Yeah, I can concur with that actually, Stas, because I just recently, I believe it was last month's mortgage payment. I actually just finally did it on automatic bill pay, because I should have been doing that the whole time, but I accidentally missed a payment because I had my withdrawal from my bank one number off, and I called them up and just told them the mistake, and they understood, and there was no penalty. I paid it right then and there on the phone and just got automatic bill pay set up, so if there's any other issues from there, I can just figure that out. So yeah, usually second time they're pretty understanding about that kind of stuff.
Yeah, at the end of the day, they want to be paid, and as long as you don't make it a habit and pay when you need to, once or twice they could excuse it. Just again, don't make it a habit. Don't be calling them constantly about it, but once or twice they understand people make mistakes. Just don't push it.
Yeah, I also previously missed a payment when I was in college, just forgot to pay off. So since then, I just started putting calendar reminders like a few days before the due date, just to go online and pay it, just to not get penalized, and also just not get the interest rate on my amount as well.
We had one time, I think it was a bank error where they didn't, because they normally send a bill by email, and somehow it never got set up just right. We had one issue, but we were able to talk it out because we're very good customers with the bank. That is one nice thing to have a credit card aligned with a bank, because you can usually set that right out of your bank account directly. Not every bank's going to have the best system in the world, but most do. I mean, I have had good mileage with Chase in general when it comes to that. I have it as an automatic reminder, but I still just do it anyway. But I like to have that the safety net. It's like with my alarms every day for work. I have my 5:30 and my 5:40 alarm, just so I make sure I get my ass out of bed.
Basically, watch your emails, watch your whatever way. A good thing to have with any of your bills you have to pay is to align it with the email that you actually consider your primary email, so it's not getting sent to, spam emails or whatever. So make sure it's going to an email that you actually check, or do the text messaging feature or whatever, just in case. There's always possibility something can happen. If you're actually trying to make your best effort, they will most likely understand.
Yeah, and Pete, since you mentioned an email, I know that some of the apps that are correlating to your credit cards, they have notification reminders as well.
Exactly.
So it will just pop as a notification on your phone, and to remind you as well to pay your credit card.
Yep. That's the more modern approach. I don't like to have too many notifications on my phone. A text option or whatever is cool too, just because, I don't know, the notifications, just not my preference. But if there's a text option, that might be a possibility as well.
In all honesty, guys, maybe that's another good point. Maybe as consumers, we should be checking our banks every day. That's what I do. I check through all my financial stuff. I know it seems like a tedious thing, but in reality, I want to make sure there's nothing crazy with my credit score, or I want to see if there's something I have to do every day. Like one of my banks, I get an extra percentage or a point towards an extra percentage of my, for an interest for one day if I keep checking my bank account every day, which I think is a great system. Encourage people to continually check their bank account. I probably check them at least once a day, at least once or twice a week at minimum. But most days I probably look at my credit cards at least once, just to see what's going on at my banks and just make sure that nothing's a little funky. If I have a funky charge, or if I'm not paying attention to stuff, I want to know when things are due. So I'd rather pay on the early side than the later side. It's a personal preference, but I think if, as consumers, and as we get into this more digital age, as even with this COVID thing, where everything is more remote, I think we need to just be more vigilant with everything in general. It's gonna help us all get along better. And this was already a trend before COVID pretty much shut the banks down for in-person service.
The next category that Credit Karma has is the credit card utilization, and they consider this a high impact category. This basically means how much of your credit limit are you using. This one basically shows the banks how well you can manage your finances. And if you're not careful, this one can get you in trouble. So for example, you might be thinking, okay, I'll just get one credit card with a low credit limit, and that will force me to be careful with my finances, not spend too much, etc. But the problem is, this does not show the banks that you can manage your money well. It just shows that you only have one credit card with a low limit, and that's all. They don't know anything else about that. But on the other hand, if the banks see that you have other credit cards, other banks that are loaning you money, but at the same time you're not maxing it out, that looks good. Because, hey, if they're trusting you and you're able to handle that, then maybe we should trust you as well. So for this category, according to Credit Karma, you should stay under 10% credit card utilization for the best results. If you download the app yourself and make an account, it actually shows you in each of these categories what you should be aiming for to get the best credit score. And then as things get worse, so for example, as you use more of your credit limit, that might lower your score. If you do it once a month, like just 1 month, and then next month you're going back to a lower utilization rate, that's okay to bounce back up. But if you make a habit of maxing out every month, that does not look good.
Well, what I'm going to add with that is, so let's say I'm not advocating for anyone to open a bunch of credit cards right now. One thing you have to keep in mind, you want to keep, when we first start out, credit limits are always a lot lower. I remember when my first card, I think I had $1,000 on a credit limit, and I probably didn't have a good credit utilization. But as we keep going out and you get more familiar with how credit cards work and all that stuff, you'll get more credit limit as you can prove yourself. And you just don't want any more than like 10% on any card. So even if you have the best deal on one card, you don't want to be maxing that out every month or even getting over 30%. You want to have like a mix of cards and get like mix of credit limits, because then it looks like you're not always dependent on your credit card for everything, or it's not your lifeline. You don't want the credit card to look like a lifeline. At least you want to show that you are capable of like paying it off every month. If I have a couple credit cards, say one that has a $10,000 limit, one has a $20,000 limit, I don't want to take more than 10% on either card. It will somewhat average out, but at the same time, if you have one particular category, let's say you have a 10,000 limit and you spent 3,000 on there, and you do that consistently or whatever, or it's just going to look bad. I mean, Stas, can you verify something for me? Is it the overall picture or is it per card?
I'm pretty sure it's overall.
Okay. Well, then I don't know if I'm quite right, but you still don't want to get too close on any particular card. So I think that's just a good philosophy in general.
Well, that, and to your point, Michael, the way you do it, that actually makes it easier from a math perspective, because it's a lot easier to think 10% off of each card than to remember, okay, well, this card you have 1%, this one has 20%, this one has 5%. What's the average? It's a lot easier to think each card 10%, you're done.
Exactly.
Also, kind of going back to what you mentioned earlier, again, we're not trying to say open up a bunch of cards that way you have a high credit limit, because again, if you don't know how to manage that, that would actually make it worse for you. Really, what's a good situation, I think, would be like if you're new to credit cards, you get your first credit card, say it's $500. That does not mean go open 5 more cards with $500 credit limits just to show the bank that you have a high credit thing. That means take that one card, $500, and don't spend more than $50 on it for about a year, just to show the bank that, hey, I know you gave me this much money, but I'm careful. I can limit myself. I don't need the full 500. I can manage this. And then once you build that score, then you can go and open more credit cards later if you choose to, but don't start off opening a bunch of cards at once.
You can also ask to get your credit limit raised. That will help that situation. I remember one situation for me in particular with one of my cards. I actually had to open a second version of the card so I can get a better limit, because it was ridiculous what I was getting for the limit. And my limit was like triple the limit that I was getting in the original card, and because banks work weird like that. So I had 2 of the same card, thankfully no annual fee, and my credit limit on my second one was a lot higher than my first one because I had proven myself. So that is one thing you can do. After a year, you can ask for a credit limit, raising of your credit limit, and that will help with that 10% score and help with your credit score in all actuality.
So, Michael, I know you mentioned adding a second card in that situation, but I know that banks are also evaluating your current credit card, and then sometimes they will raise the limit on that current credit card as well. You'll just get like even the mail, it will tell you that they raised your credit limit to whatever the amount is.
Right, but again, we have to remember that if they raise your credit limit, that doesn't mean that all of a sudden you have permission to spend a bunch of money. That just means that if you
Exactly.
a bit more, keep doing what you're doing, and you'll be okay. Don't just think free shopping spree, because it's not free. Let's talk about the next category, another high impact category, and this is the last high impact. After that, it'll be a bit lower, but still important. But this category, derogatory marks. So this one is a biggie. These can stay with you up to 10 years. If you don't pay your bills, it gets sent to collection agency, or if you file for bankruptcy, that is really bad. Even just one of those things can negatively affect your score. There's no lenience there. They're not going to say, okay, one, that's fine. No, one is really bad. So to the best of your ability, it's better to avoid collection agencies, avoid bankruptcy, because that is really bad. I don't really know how to stress that even more. This doesn't mean just credit card bills, by the way. This could also be medical bill, which I understand can be a hot topic, big issue for a lot of Americans. But any kind of bills, if you don't pay it on time and it gets sent to collection agency, that looks bad on your credit score.
Actually, you know what, guys? I did have that one time happen. It was a stupid clerical error, and that's why it happened. Thankfully, it didn't do much, but I went to a doctor like a year or two before, and they just never sent me the bill. And I had a collection agency coming after me. Thankfully, it didn't do too much of an impact, but I think it definitely did. It did hit me a little bit. So, and that's not my fault. So you should always. I know it's like hard to keep track of that stuff, but now everything should be a little more straightforward. I mean, at least make sure they have your credit card on file at the doctor's office, so if they do try to send you a bill, at least they'll get you. So, because I remember I was like, what is this? And the doctor forgot to charge me for like $10 or $20, and they had a collection agency come after me. I thought it was the most ridiculous thing. I would have paid it. It wouldn't have been an issue, but you guys never talked to me. It does happen for the most part. I mean, you don't want it to happen, but in a very rare occasion like this, I think you're going to be okay. So I wouldn't freak out every time, but don't make a habit of it. As Stas was saying, like any of this stuff, don't make a habit of the bad things. Just make a habit of good things, like low credit utilization.
So the next category is a medium impact, and that's age of credit history. Banks like to see how you manage your finances long term. They do not like it if you're opening and closing credit cards all the time. Having said that, though, sometimes you might have a valid reason to close a credit card. I personally, what I like to do is I like to keep my oldest credit card open and use it every once in a while. That way, that's my longest credit history card, and that raises my average. If you keep your average between 7 or 8 or 9 years if possible of credit history, you're good. For someone new to credit cards, obviously they're not going to have a 9-year history when they just applied, but that should be your long-term goal, to keep that card for a longer period of time and raise that average. What do you guys do? Like, what is your strategy?
I personally have my first credit card and I barely use it. I probably just put like between $10 to $15 a month on that card just to keep the length of the credit history long enough. And I had that card for probably 13 years now. That's one of the reasons why I didn't cancel that card now, even though it doesn't bring me any benefits.
Right, that's a good point too there. I don't use that card much now because I have other cards that have more benefits, higher returns, but I still charge something on it maybe every few months just to keep it open, just to keep that credit history alive.
For me, yeah, mine's about a 12-year history with one of my cards, and that's the one I actually had to fight to get because I just moved, started my new job. And one thing I would almost advocate, and I think I'll talk about this a little bit later, is almost starting as early as possible. Hopefully you can work with your parents or something like that. If you're on the younger side, like opening a credit card like very early and just being responsible for it. Like when you first go to college, even if it's like $500 credit limit, it will be good and it'll be a good impact if you can show that you pay everything off. And then it would also give you that longer term thing instead of having a co-credit card like where you're tied to the same account where it doesn't really give you a history per se. But yeah, my oldest card I still use. It's one of those weird rotating category cards. It's the Chase Freedom card. Still a very good card, but just not one I'm using on a consistent basis. I mean, right now I'm using it a little bit more because they have it on Amazon. Even though I actually have an Amazon credit card, it actually does a little better with some of the benefits. I keep that card open, and I try not to open too many cards in general.
Yeah, and the thing is, even if it's a lower credit limit, that's fine. I mean, my oldest card, I think, has the lowest credit limit, but that's okay. The important part is that I had it for a really long time. I think it's over 14 years for me, and the banks like that, to see that you're managing credit for a long time. It's not just a one-time thing here and there. It's that you were able to manage this for the long term. So the next category, this is low impact, but again, still important, total accounts. This kind of relates to the credit utilization, since obviously the more accounts you have, the higher total credit you have available as well. And similar to that category, banks likes to see that you have multiple credit cards, that other banks are willing to loan you money, so they're more likely to loan you money as well, and that you're able to manage them without maxing out every single credit card you have. In this category, according to Credit Karma, they like to see that you have above 11 accounts, and that does not mean 11 credit cards. That could mean you have a few credit cards, you have your car loan. As you get older, maybe you buy a house. So basically a mix of credit accounts, not only credit cards, but they like to see that you're using credit, you have different types of credit, and you can manage it well. Also, even if it's been closed, so like if you paid off your car, that's fine. You closed that account, you paid off the loan, but that still counts towards that. So that's actually a good thing that you don't need 11 credit cards. It's just showing that you are being responsible over the long period. And even though you've closed cards, as long as, of course, they've been closed for a good reason and not just because you didn't pay on them and they forced you to close it. But if you paid off your loan, they closed it, that's fine. They see that you paid it off. That was good. Final category is hard inquiries. Again, this is low impact, and this is basically saying how many times have you applied for a loan or a credit card, because every time you apply for a loan or a credit card, every time a bank checks your credit score, that shows up on your credit history. Your credit score, and these go after time, so it's not a big deal as long as, again, you're managing things well. So if, for example, you open 3 credit cards, buy a house, buy a car, all within 1 month, that sets off red flags to banks. Like, what's going on? Why are you spending so much all of a sudden? Can you really afford this? Whereas if you open a credit card now, wait a few months, maybe open one later, and then next year buy a car, that makes more sense. That's an average consumer, they understand that. For the best credit score, according to Credit Karma, best to keep these under 2. So don't try to apply for too many credit cards or loans at once. But if you have 2, that's fine. Just don't go overboard. And also, this is one where you can be a bit strategic on. And for example, if you plan to buy a car, but you also want a credit card, don't get the credit card today and then buy a car tomorrow, because then you'll get a higher interest on that car because you just opened another credit line. Instead, buy the car, maybe wait a bit, and then get the credit card.
And it takes what, about 2 years for hard credit check to get off your history? Isn't that correct?
Yeah, according to Credit Karma, they say it could take up to 2 years, but really they say it can start fading. The effect of it can start fading after a few months. I'm not really sure what they mean by fading, but generally from what I've seen on my credit score is that after a few months, it starts going back up to where it was. So again, as long as you don't keep getting new credit cards every month, if you get one now, a few months from now, it won't be as impactful and you'll be okay. And then after 2 years, that's just, they'll forget about it completely because it's been so long. And as long as you've been managing well, it's okay.
Well, this is it for this week's episode. Stay tuned. We're going to get a little bit more into this topic again. We're going to talk a little bit more about like how you can monitor your credit. You don't always have to use just Credit Karma and like debit versus credit. So we'll be back to you in the next 2 weeks, and we'll get another episode. So stay tuned. Thanks for joining us in the podcast tonight.